Ladies and gentlemen, good day and welcome to the Q3 FY23 conference call of Bigbloc Construction Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you, Michelle. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Bigbloc Construction Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter and 9 months ended of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for remarks. We have with us Mr. Mohit Saboo, Director and Chief Financial Officer. Without any further delay, I request Mr. Mohit to start with his opening remarks. Thank you, and over to you, sir.
Good afternoon, everyone. It gives me immense pleasure to welcome you all to our earnings conference call for the third quarter and 9 months ended for the financial year 2023. In the interest of those participants joining us today who may be unfamiliar with the business of the company, I'd like to give a brief overview of the company first. Bigbloc Construction Limited is one of the largest manufacturers in India of autoclave aerated concrete blocks, AAC blocks, and related products manufacturing company with a total installed capacity of 575,000 cubic meters per annum. AAC blocks are a superior quality building material which provide unparalleled blend of strength, thermal insulation, soundproofing, unsurpassed fire resistance, and highly proficient building capacity. AAC is a lightweight, natural, and non-toxic construction material that saves energy and is eco-friendly. These AAC blocks of the company are marketed under the brand name NXT BLOC, which is a green product for the construction industry. Bigbloc aims to become an unparalleled name in the industry manufacturing quality building materials that focus on sustainability. It also hopes to aid the construction and infrastructure industry in adopting green and sustainable practices for a better future. Bigbloc currently has 2 state-of-the-art manufacturing units located at Vapi and Ahmedabad near Gujarat, and making it one of the largest AAC manufacturers in India. Moreover, with the ongoing capacity expansion plans, the company will catapult to become the largest AAC manufacturer in India by FY24. Now let me start by briefing you on the company's financial performances on a consolidated basis for the third quarter of financial year 2023. The third quarter's operating revenues was 49.5 crores, which was up by 2% quarter-on-quarter, but were marginally down by 6% year-on-year due to impact on demand driven by an extended monsoon season, Diwali season, and also some impact due to inflationary reasons, although the decline in sales volume were offset by the higher sales realizations. The consolidated capacity utilization improved from 79% in Q2 FY23 to 83% in Q3 FY23. EBITDA stood at Rs 13.3 crores, witnessing a robust growth of 82% on a year-on-year basis. EBITDA margins stood at around 26.87%. EBITDA margins improved in Q3 FY23 due to higher sales realization and further cost optimization on logistics and power costs. PAT was reported at Rs 7 crores, which grew by almost 83% year-on-year basis. PAT margin for the quarter was approximately 15.56%. For the 9 months under review, we reported consolidated operating revenue of Rs 154 crores, which grew by 25% year-on-year basis. EBITDA was reported at Rs 40 crores, which grew by 141% year-on-year. EBITDA margin stood at 25.72%. Also, PAT was reported Rs 25 crores, witnessing a growth of almost 186% on a year-on-year basis. PAT margin stood at 16.02%. Coming to the operational highlights for the quarter under review. During the quarter, the joint venture company, Siam Cement Bigbloc Construction Technologies Private Limited, acquired 60,000 square meter land at Kapuranj, Khera district near Ahmedabad, Gujarat for setting up a 3 lakh CBM per annum plant. Siam Cement Bigbloc Construction Technologies Private Limited is a JV between Bigbloc Construction Limited and SCG Group from Thailand, wherein Bigbloc holds 52% stake and SCG holds a stake of 48%. The JV with SCG Group aims to share techno-commercial knowledge, promote mutual growth and cooperation in the construction industry, and bring new age building materials to Indian markets. The company is also setting up 2 greenfield projects with a combined capacity of 8 lakh CBM per annum, out of which 5 lakh CBM plant at Wada is in Palghar district at Maharashtra, is currently under installation, and the commercial productions are expected to begin in the month of February. Post completion of all expansion projects, the company's total capacities is increased to 13.75 lakh cubic meter per annum, making the company the largest AAC player in the country. We also expect to generate almost 2.5 to 3 lakh tons of carbon credit every year post this expansion. With these expansions, the company will further penetrate its presence into untapped markets across the western regions and also make it the largest player in India. Strategic initiatives, operational efficiency, with a vision for building a brand with innovative products are likely to contribute to healthy growth and maximize value for all stakeholders in the near to medium term. With this, we can now open the floor for questions and answers session. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and 1 to ask a question at this time. We have the first question from the line of CA Karvit Goel from Invest Research. Please go ahead.
Hello. Good afternoon, sir. Am I audible?
Yes.
Yes, you are audible. Can you be a little louder?
Oh, yeah, sure. Yes, that's fine. Okay. So my first question is on the volume side. Volumes for the quarter 3 are significantly down on Y-on-Y basis, despite being a very good quarter for construction activities, as you also mentioned in last Concall, right? So this fall is raising a big question on migration from red brick to AAC blocks and ramping up of your upcoming facilities. So what is your honest view on the same, sir?
So the volume for year-on-year basis is a little on the lower side. There are mainly 3 attributable reasons for the same. One of them is the little prolonged monsoon, as monsoon continued even during October month in Gujarat and Maharashtra region. Secondly, also this year, because of a lot of travel and everything opening up during Diwali, so it was a long vacation season during which labor as well as a lot of people were busy traveling. And thirdly, because of better prices realization, the volume turned out to be a little on the lower side. But in spite of that, the capacity utilization has been at around 83%. And also during after Diwali, what happens generally in Gujarat and such regions is there's a long vacation period, because of which the capacity utilization for the Gujarat plant was comparatively lower, whereas for Bombay it was comparatively on a higher side.
That is one. And coming to the guidance part that was given in last con call, you mentioned your volume shall grow 8 to 9% over FY22, but your 9-year volumes are down as compared to the corresponding 9 months. That is 4% down. So what is your view on that, and how will the total volume will shape up by the end of financial year 23, sir?
So for the financial year 2023, the volume should be at almost similar levels as what it was for FY22. Because of the slowdowns because of the monsoon season and prolonged monsoon and Diwali vacations. And also apart from this, because of the interest rate hikes and inflationary pressures, there was a little bit sluggishness in the market as compared to what it was in the previous year. But that margin compensation has been happened because of by the increase in realizations.
But sir, in this particular quarter, your realizations I think are down to 4290. In half one, it was 4380. So what is the reason for that?
So realizations are a little down in that aspect because of the overall the pricing of all the raw materials and everything have also come down, and because of which our customers have also requested us to reduce some prices on some aspects. That is the whole and sole reason behind that.
Means your earlier guidance is not holding true, right? 8 to 9% increase in volume. As you mentioned, the volume will be flattish for FY23.
Our volume should remain flattish in FY23 for the existing capacities. For the new upcoming capacities, the scale-up will happen month over month, and our guidance remains still the same, that the lower capacity volumes have been compensated by higher margins, higher selling prices.
No, sir.
If you see our selling prices for year-on-year basis, then the selling prices have gone up by almost 12 to 15%.
That I agree, but earlier you mentioned that the volume growth will be 8 to 9% over FY22. In FY22, you did around 497,000 kind of volume, and based on that, it should be 562,000, right? So I was asking from that point of view whether you are stepping back from those guidance in volume.
So on a year-on-year basis, our volume should be more or less flattish.
Okay. And earlier guidance in the terms of top line, you were mentioning you will achieve 225 CR kind of top line. So what is your view on that now?
So our top line should be achieved as what it was guided earlier, because the volume down growth has been compensated by better pricing and better margin realization.
So that means you are saying your guidance for 225 CR of top line you will achieve, but in 9 months you have done only 154 CR. So for that to achieve, you have to achieve almost 55 CR kind of revenues in quarter 4. Is it okay with you? Means in accordance with your guidance, right?
Yes, in 9 months we have achieved almost 154 crores of volumes,
right.
And also there will be new capacity addition taking place in the upcoming months. The Vada plant will start commercial production, so that should also add to the volumes, the better revenues.
No, I agree, but the point is you are saying earlier you had guided for 225 CR kind of revenues, right? And in first 9 months you have achieved 154 CR. So you are saying the guidance is still holding true for revenues in value terms. So for that to achieve, you have to almost do around 75 CR kind of revenues in quarter 4. So are you seeing these numbers to come in quarter 4? 75
we should be getting almost 55 to 65 crores of revenue in quarter 4. That's what we are envisaging so far. Because of in Q3 also we got a revenue of almost 50 crores, and in last year also we got similar revenues. So 50 crores is the revenue from the normal operations that we are getting on a quarter-on-quarter basis. And apart from that, we should get some additional revenue from the upcoming facilities. So 55 to 65 crores should be the revenue for the next quarter.
Understood. And what kind of PAT margins you are expecting for that 65% revenue, 65 CR revenue?
The EBITDA margins that we have witnessed in the last 2-3 quarters, we should be able to continue with those same.
In the quarter 4, right?
Yes.
Okay. So that's it from my side, sir.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and 1 now. We have the next question from the line of Forum Ghoshal from an individual investor. Please go ahead.
Good afternoon, sir. So can you elaborate on previous person's question, as in, why volumes declined by over 15% year on year? Like, is there a structured slowdown in the real estate sector that you are witnessing? Like, we are hearing very good sales from the real estate players these days. So then why is it that, it's not reflecting in our sales? How is like the current order book right now? And also, if demand was down, why did realizations go up even in this quarter? Do you see any correction impact on the realization in the coming quarters due to the lower demand?
So the capacity utilization has been down by almost approximately 15%. Majority of the reasons that can be attributed to the same is a little bit of the prolonged monsoon, as I already mentioned earlier, and also what happens during Diwali this year after 2 years of COVID, which was there during Diwali period. This time it was a completely open travel season. So because of which, a lot of people were traveling, and that was probably one of the reasons that we can envisage for the slowdown during the Diwali period, which was for almost 10 to 15 days. And regarding pricing utilization, so, the demand has been pretty good, because of which we have been able to, get our prices on a better and get better realizations in this quarter. And we see in the current quarter also, we see the, pricing to be on almost a similar basis, or a little bit maybe also on the higher side. Coming down to, your question for the real estate sector and the demand scenario. So overall, currently also we are seeing good demand in the market, and, we are continuously seeing that red bricks are being replaced by AAC blocks on a quarter-on-quarter basis. The consumption of AAC blocks is going high. And as of today also, I think AAC blocks in majority of the regions that we are present in, the pricing of AAC blocks is lower than that of red bricks. So from that angle also, we see a good comfort level in increasing the prices or maintaining our similar margins going ahead.
Then if you are saying that if demand is good, then why are current sales down?
So as I mentioned, the sales were down during October and November month. October was because of prolonged monsoon season, because generally people don't expect monsoon to continue until almost 10-15th October. One reason was that. And secondly also, during Diwali period, what happened was the demand was a little slow because of unavailability of labor also, and also because of a lot of people traveling. So these were the main things that we have observed. December month, the demand was at full-fledged, and currently also we are observing full demand scenario.
Also, sir, one follow-up question regarding volume. So with volume coming down, are you sure that we'll be able to sustain the margins in the long run? And what is the biggest reason for seeing such a high margins, as we haven't seen such margins in the industry before?
So the volumes have come down, but as you have seen in Q3 also, that margins have gone up. So it means that the prices are sustainable. And also this is a product in which, you cannot do inventory for a very long period, nor at our factories, nor at the site of the builder or the contractor. Looking at that aspect, it gets a little difficult to get,
I'm sorry, sir, we are not able to hear.
5, 7, 10 days.
Sir, I'm sorry to interrupt. Can you please repeat your last line, sir?
So it's not possible to stock this product for a very long period or huge quantity of it, nor at our factory premises, nor at the site of the customer who is a builder or a contractor, because it is a bulky product. And because of that, when there is a temporary slowdown, like because of prolonged monsoons or because of slowdown during Diwali season, when a lot of the construction sites were closed, because of all such things, the capacity utilization has been a little lower in this quarter. But we have been able to get better realizations in the last quarter, even after lower capacity utilizations, and in the current quarter also we are witnessing almost similar pricing.
Also, just one last more question. Did we have any carbon credit sales during the quarter, and if so, how much was it?
In the running quarter Q3, there was no carbon credit sale. We are currently getting our credits issued, for which the audit is ongoing, and the last carbon credits that we had sold were in Q2, which was for an amount of approximately 1.35 or 1.4 crores. And these credits were issued for the period up to August 2021. Now, for the period from September 2021 till November 2022, the audit is ongoing.
That's it from my side. Thank you, sir.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask a question at this time. We have the next follow-up question from the line of CA Garvit Goel from Invest Research. Please go ahead.
Hello.
Will you proceed?
Yeah, I'm audible, right?
Yes.
Sir, one quick question. First of all, congrats on your good results. Sir, can you spend some time on your expansion plans, right? Number one. you have currently expansion planned at two facilities, isn't it? One is in Wada and one is in Kappadganj, right? One is in Maharashtra and another one would be in Gujarat, right? So what is the status currently, and how are you looking at utilizing these facilities if you are not going to see aggressive growth in AAC blocks? So can you spend some time in explaining this, sir?
So we have two upcoming facilities for expansion. One of them is at Wada, which is again in a wholly owned subsidiary of Bigbloc Construction Limited, whereby we are putting up a capacity of 500,000 cubic meter per annum, which will be into two phases. The first phase, we are starting commercial productions tentatively in February 2023 of 250,000 cubic meters per annum. And the second expansion that is upcoming at Kappadganj near Kheda is in the JV company with SCG, where Bigbloc holds a stake of 52% and SCG holds a stake of 48%. So the expansion at Wada is only for AAC blocks, whereas the expansion at in the JV company is for AAC blocks as well as panels. Coming down to the status of expansion, so the Wada plant, as I mentioned, we will start commercial production in February 23 for phase 1. And phase 2, we intend to start commercial productions tentatively later on in the year 2023 itself. And for the JV company, also we intend to start commercial productions in calendar year 2023. So probably in Q3 2024. Okay. And regarding the capacity addition, so we see a robust future and for the real estate segment. And also we are increasing our marketing spread and marketing teams in order to, get better capacity utilizations for the upcoming capacities. Mm-hmm. And replacement of red bricks is still, a huge opportunity market for us. As per our estimate, still the share of AAC blocks is just around 10 to 11%, whereas red bricks is still around 80-85%.
Okay. See, when I look at these capacity expansion, this is huge, right? So are you sure that the market needs that level of capacity which can be observed within, say, 1 or 2 years from the time you go or commercialize these facilities, sir? You have any view on that?
So this capacity addition is needed because, as I mentioned, the share of AAC blocks is still very low in our country. If we look at a country like China, where there are more than 3,500, 4,000 AAC block plants, whereas India just has maybe around 150 to 175 AAC block plants. So if you look from that dynamics and if you look from that growth opportunity, I'm sure you can visualize that that kind of growth is possible and much needed. Moreover, what happens is earlier red bricks used to be very cheap, and also, off lately, the government is also trying to reduce down and curb down on the usage of red bricks. And that's how we are trying to gain attraction and advantage for AAC blocks.
Okay. Sir, another question, like in your presentation, you have spoken about 60% subsidy from state government. It is on which amount, sir? Like when you say 60%, how would you quantify that? The capex that you incurred, is it?
So the capex that is upcoming in Wada, there is a state government subsidy ongoing, whereby if you are an MSME and if your capex is less than 50 crores, then 60% of that amount will be received as subsidy from the government spread over a period of 10 years. So that is the reason that we have divided the project into two phases. The first phase, which will be 2.5 lakh cubic meters, for which the capex will be approximately 48-49 crores. Mm-hmm. And on this, we'll get subsidy from the government, which will be in the form of interest subvention, electricity duty subvention, stamp duty exemption, gross GST refund, all such methods.
Okay. Okay, sir, regarding this joint venture, right, that you are with the Singapore-based company, can you elaborate on the products? I see that something like wall panels and stuff which is being considered. So can you spend 2 minutes on explaining the products that you're looking at as part of the joint venture?
Yes, so currently we are manufacturing AAC blocks, which is autoclave radiated concrete blocks. And one block is almost, in terms of size, that 9 red bricks is equal to 1 AAC block. in the joint venture, we'll be manufacturing AAC panels. So again, more or less majority of the setup and majority of the infrastructure is the same. But instead of manufacturing AAC blocks, what will happen is the panels will be huge, big size panels which will have a height of almost 8, 9 or 10 feet as required at the construction site, a width of 3 feet which will be more or less standard, and a thickness of 3 inch, 4 inch, 6 inch which is required by the customer depending on his internal or external wall partition. Moreover, these panels will be reinforced with steel. So because of using these panels, the construction will be much more faster. It is steel reinforced, so that way, the product is much superior as compared to AAC block. So this will be what, and currently there is hardly anyone who is doing AAC panels in India. So it is another new age green building material.
Okay, and predominantly these panels are used in commercial projects, is it, sir, or it could be used anywhere?
It can be used anywhere. It can be used even in residential, commercial, industrial, all projects. So currently the AAC blocks also that we are selling, we are supplying to lots of industries as well. So we are supplying to AMI Organics, if you are aware. Also we are getting lots of inquiries from lots of other industrial developments that are taking place in Gujarat as well as Maharashtra. So L&T also to the likes of is developing a factory for GSW. For that also they are using AAC blocks. Reliance Township is coming up in Nagothane, for which we are supplying AAC blocks. So the demand scope and potential is huge.
Okay. And have you started doing some pilot work on this wall paneling as well, sir? Like, I know that your facility is not ready, but in order to test the pulse of the customer, like whether they would be really using those stuff. So have you had any experience, first-hand experience on that?
So our partner team from SCG has already been selling panels at different locations across the country, and we together have also done some mock-ups at some of our customer sites, which includes the likes of Loda L&T. And they have shown interest in the product and they have liked the product, but they want to know the consistent supply, the lead time and everything. And when you're importing and selling the product, all those things turn out to be a little bit of a challenge. And we are not able to commit them all those things, and because of which they have not yet placed commercial orders for the same. But the additional marketing, efforts that we'll have to do, which will be done in before 3 months of we start the commercial production at that particular plant.
Okay. And regarding this target, sir, like for this year, you, as the previous participant was asking you, it was 225 CR or something like that, right? For FY23, you are confident of achieving that levels. That's what you responded, I suppose. Can you confirm that?
So we are confident of achieving at least around 95% of that target.
Okay, and with the similar level of margins, that's what you said, correct?
Yes, I think you would have observed that moreover in all quarters our margins have been at almost similar levels.
Correct. And I think I asked this question again and again. You have this basic raw material for manufacturing this block, which is ash, right? Fly ash, right?
Yeah.
So is it sufficiently available for you? Are you seeing any challenges in near future in terms of raw material procurement side?
No, we are not facing any such challenges because our main raw materials are fly ash, cement and lime, and all of them are available in abundance in the regions where we are currently present.
Okay. And what is your view for next 3 years, sir? Like where you want to reach?
So we already have these 2 capex plans for the west in hand. And once we start the commercial productions at Vada, we'll be looking at 2 other new locations for 2 other altogether new geographies for our further expansions. One of them will be in the north and second in the south.
Okay, sir. That's it from my side. Thanks for the opportunity.
Thank you. Participants, you may press star and 1 to ask a question at this time. We have the next question from the line of Chintan Desai from Param Capital. Please go ahead.
Thank you, sir. Just one data point I needed for the bricks per se. Till Q1, we have been sharing the pricing of bricks. Can you please share us what would be the pricing for Q2 and Q3 of bricks?
So, brick pricing earlier used to be in the range of almost 2 years back used to be in the range of 3.5 rupees, which on a topmost level had gone up to almost 10 to 11 rupees a brick. And after that, the brick prices have also come down marginally, and current brick prices are ranging in the range of 8 to 9 rupees a brick. If we see that in terms of cubic meter, then the brick pricing comes down to almost 4,500 to 5,500 rupees a cubic meter approximately.
Okay, got it. And any outlook on the pricing for the bricks, as in the stricter regulation, and hence this price more or less should be, the precursor that we should look at, or it can further fall?
So I think this pricing of bricks are nowhere coming down, because for them the transportation cost is 3 times than what it is for us, because the densities are much higher. Secondly, slowly and gradually the bricks kilns are moving away from the city. So for them the distance is also increasing and the pricing is also going up. And also, overall manufacturing bricks as well as application of bricks, making a wall using bricks, in every aspect bricks are turning out to be more and more expensive. So looking at that aspect, brick will keep on going down from quarter on quarter basis going ahead.
Oh, got it. Thanks. And just last question on in terms of awareness, particular with respect to AAC blocks, tier-wise, if you could give us some flavor as to, urban areas, developers are well aware of AAC blocks. How is the situation in, say, rural areas or the towns where, a single house is made by an individual?
So, in urban areas, I think the market penetration in tier 1 cities or going up to maybe even tier 2 cities, the penetration has been pretty good. In tier 1, the penetration might be going up to 75-80%. In tier 2, maybe at around 60% oddly. But in tier 3 cities, the penetration and the awareness is still a little bit low, and that's where we are working on ourselves also, as well as through the contract manufacturing that we are doing for Ambuja and such people, because of which we are able to penetrate such markets and generate some leads and inquiries and increase our quantities in that region.
Right. Any activities from your side that you do to increase the awareness in those areas?
Just normal marketing activities and getting them more aware about the advantages of AAC blocks and the harmful effects of bricks.
Got it. Thanks a lot, sir, for the answer.
Thank you.
Yeah.
Thank you. We have the next question from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you for the opportunity. There have been a lot of questions on your volume and demand. So do you have any way to estimate the demand in the region that you serve and your market share?
So the market share as of today in the region that we are present in, so we would be having a market share of almost 4 to 6% on an average out of the total market of AAC blocks in Western India, which includes the cities of Bombay, Pune, and mainly the states of Gujarat and Maharashtra. And there's no concrete way to understand the demand scenario, because this product is replacing red bricks, which is more or less a complete unorganized industry. And what has happened is since April, even red bricks have been gotten under GST. So a lot of the red brick manufacturers and all have also been able to facing lots of challenges because of the compliance burden, e-way bill, e-invoicing.
I'm sorry to interrupt, sir. Can you please repeat your last line? We couldn't hear you. Mr. Sabu? Mr. Sabu, we are unable to hear you, sir.
Hello?
Yes, sir. Please proceed.
Yes.
I would request you to repeat your last line, sir.
So from 1st April onwards, even red bricks have come under the purview of GST. And, GST is okay, but for them, the entire compliance of GST, e-way bills, and all such things are a huge headache. because of which lots of small unorganized red brick manufacturers are also shutting down their facilities, to be very frank. So there's no concrete market share for this product as compared to against what red bricks.
No, when I say market assessment, you have given 2 states, right, Maharashtra and Gujarat. But I thought your product would get transported to a very small distance. It will really not travel very large distance. So I really mean micro market share.
Sorry, I didn't get you. Can you come again?
No, your product can't be transported very long distances, right? Because of the volume and the weight.
So we can go to a distance of almost 300, 400 kilometers easily, to be very frank, for this product.
Okay.
For that, I have already given you what market share we currently have in the states of Gujarat and Maharashtra.
So who is your major competitor in AAC then?
So there is Hyderabad Industries Limited. Apart from that, there is Magicrete. So these are the 2 other big names. Apart from that, majority of them are all small, or unorganized players sort of thing. Not unorganized exactly, but single plant or, lower capacity size players.
And how big are HIL and Magicrete?
So HIL currently has a capacity of around 8.5 or 10 lakh cubic meters. And I think Magicrete is also set around similar capacities of around 7.5, 8 lakh cubic meters.
Okay. Thank you very much.
Thank you. We have the next question from the line of Anirudh Singhi from Dalal & Broacha Portfolio Managers. Please go ahead.
Hi. Thank you for taking my question. I just wanted to understand our margin profile. So until FY22, we are doing like low teen sort of margin, and suddenly we're doing 24-25% margin. So what has led to this expansion?
Your voice was quite low. Can you come again?
I'm audible now?
Yes, that's better.
Yeah. So I'm saying until last year, until FY22, we were in low teens sort of margin, and now we're doing mid-20s sort of margin. So what has led to this jump?
So, as I mentioned earlier, also to one of the questions regarding, why has the margin gone up and why is, what is the pricing of red bricks? So, 2 years back as compared to red bricks, AAC blocks was an expensive product. So, the pricing of red bricks 2 years back used to be in the range of almost 1800 to 2200 rupees a cubic meter, whereas red bricks were in the range of almost 2500, 2700 rupees a cubic meter. What has happened in the last 2 years is that red bricks, because of the pollution control norms or because of the transportation cost and also moving away from the markets, their overall costing and everything have gone up. Also now GST burden coming up on them. So that's why pricing of red bricks have almost come up to almost 8-9 rupees a brick, which comes down to almost 4500 to 5500 rupees a cubic meter. Whereas AAC blocks today are comparatively cheaper than what red bricks are. So one of them main reasons for it is this. Secondly, also the awareness and the availability and the acceptance for AAC blocks has grown up drastically in the last 2 years.
Okay. So do you expect these sort of margins to continue over the longer term?
Yes, we definitely accept this sort of margins to continue for the longer term, and I think it can be seen from our results itself from the last 8-9 quarters, where the overall the revenue margins and turnovers, everything have gone to sort of consistent level. And also, as I mentioned earlier on one of the questions, that the demand scope and the growth scope for AC blocks is used because there is a product which is still replacing red bricks.
Okay, and just to get a better understanding, in the 9 months, what percentage of our growth would be attributable to realization improvement and how much to volumes?
Can you come on the question again?
So in this year, how much of our growth is from volume and how much is from realization?
So in terms of volumes, more or less, it's sort of flattish. So majority of the growth has been just due to improvement in realization.
Okay. So now going ahead, if we expect this sort of realization to continue, our volume growth will have to drive the growth, right?
Yes. So volume growth will also come ahead because of the capacity additions that we are also taking up.
Okay. All right. Thank you.
Thank you. We have the next question from the line of Avinash Gorakshankar from ProfitMart. Please go ahead. Mr. Avinash, I have unmuted your line. Kindly proceed with your question.
Yeah, I think I had just two questions. One is I wanted to know, is the business, seasonal? Because, we saw a slight dip in your revenue for the third quarter going. If you could, tell us that.
Sorry to interrupt, Mr. Avinash. I would request you to use your handset to ask a question. We cannot hear you clearly, sir.
Hello?
Yes, sir. Please proceed.
Yeah. Apologies, because, actually I'm traveling, so there was a slight disturbance. But I just wanted to understand from the management team that is slightly seasonal. Is the second half, that is Jan to March, slightly more robust compared to the third quarter? Because December we saw a slight dip in revenue. If you could share some details. Unfortunately, I joined the call a little late, so please accept my apologies. If I'm repeating the question.
No, completely okay with that. So, coming down to the seasonality question, it is a little bit seasonal because what happens is in monsoon period, the construction sites and all also get a little slow because of torrential monsoons in Bombay and overall Western India region. And so, in terms of capacity utilization, generally in monsoon period and post Holi, the capacity utilizations are a little on the lower side. Coming down to this quarter Q3, the capacity utilizations have been a little low because of prolonged monsoon season, which stretched up to October also. And also during Diwali period, there was a longer break and longer shutdown because of unavailability of labor due to travel opening up, everyone going to their villages, and a lot of weddings and everything as well. So because of majority of these two reasons, October and November were a little slow. And from December onwards, I think we have seen the market pick up pretty well.
So can we expect that, from the fourth quarter, that is from January onwards, you could definitely see not only realizations but even the volume pickup to be significantly robust as compared to the third quarter? If you could give us some clarity on that.
Yes, I think we can definitely expect better capacity utilization in Q4 as compared to what we have observed in Q3.
Okay. And one more question which I wanted to ask is that your Thailand facility, your JV with your Thailand partner is expected to be commissioned from the fourth quarter of FY23. So if you could share some details on that and how is it progress in the coming 12 months, some color on that.
So we have just completed the land acquisition, and majority of the lands that we acquire these days in Gujarat or any such regions are agricultural lands. And the first process is to convert the agricultural land into a non-agricultural land, for which we'll have to do lots of government formalities, which have been already started, and we expect to complete the same in the upcoming 2-3 months. But irrespective of that, we can start, construction activities at our site, which we intend to start in the upcoming 1 month or so. And we'll also place machinery orders in the upcoming in 1 or 2 months. And post that, we have a target of completing entire construction as well as installation of machinery activities in the period of almost 9 to 10 months from starting the same.
So hopefully, we should be able to see some sort of revenue, some sort of turnover contribution, at least in FY24, or is it going to be much beyond that? Because we were wanting to know the investment is about 88-89 crores. So this whatever work is going to be completed, can we see some sort of revenue in FY24 or a little later? If you could give some clarity.
So yes, we can expect some sort of revenue from the JV plant also by Q3 FY24 or Q4 FY24.
Okay. Basically, second half of FY24, we could see a little bit of contribution. Hopefully.
Yes, I think we can see a good contribution from Q4 FY24.
Okay. Anyway, I think thank you very much and all the best to you and the entire management team.
Thank you so much. Thank you so much for such good questions.
Thank you. We have the next follow-up question from the line of CA Karvit Goyal from Invest Research. Please go ahead. Mr. Goyal, kindly proceed with your question. I have unmuted your line.
My question has already been answered, right? So.
Thank you. As that was the last question for today, I would now like to hand the conference over to the management from Bigbloc Construction Limited for closing comments. Over to you, sir.
I would like to thank all of you for participating in this earnings conference call and asking such good questions. I hope we were able to answer all your questions satisfactorily and at the same time offer insights into our business and for upcoming growth plans. If you have any further questions or would like to know more about the company, please reach out to our investor relations manager at Valorem Advisors. Thank you. Stay safe and stay healthy.
Thank you. On behalf of Bigbloc Construction Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.